The Intelligent Investor by Benjamin Graham is a classic work on value investing that has stood the test of time since its first publication in 1949. Graham, known as the father of value investing, imparts timeless wisdom and principles that remain relevant for investors seeking to build and preserve wealth. The book is considered a cornerstone of investment literature and has influenced many successful investors, including Warren Buffett. Graham's central philosophy revolves around the concept of value investing, which he defines as buying securities when their market prices are significantly below their intrinsic values. The intelligent investor, according to Graham, is one who approaches the stock market with a business-like mindset, emphasizing long-term wealth preservation over short-term speculation. One of the key ideas Graham introduces is the distinction between investment and speculation. He argues that an investment is one made with thorough analysis and a margin of safety, aiming to protect the investor from substantial error. In contrast, speculation involves making decisions based on market predictions and short-term price movements, often without a solid foundation of analysis. The cornerstone of Graham's investment strategy is the concept of margin of safety. This involves buying securities at prices significantly below their intrinsic value, providing a cushion against unforeseen market fluctuations. By focusing on a margin of safety, investors can minimize the risk of permanent loss of capital and increase the likelihood of long-term success. Graham introduces the concept of the Mr. Market analogy to explain the market's irrational and unpredictable nature. He encourages investors to view the market as a moody business partner whose daily offers to buy or sell can be exploited rather than followed. Instead of being swayed by Mr. Market's emotional fluctuations, the intelligent investor remains disciplined and rational in their investment decisions. The book also discusses the importance of a sound investment policy and the need for diversification. Graham advocates for the creation of a balanced portfolio that includes both stocks and bonds, aligning with the investor's risk tolerance and financial goals. He emphasizes the importance of avoiding the herd mentality and resisting the temptation to follow market trends blindly. In addressing the issue of stock selection, Graham introduces two types of investors: the defensive investor and the enterprising investor. The defensive investor prefers a passive approach, relying on a well-diversified portfolio of large-cap stocks and bonds. The enterprising investor, on the other hand, is willing to put in more effort and engage in in-depth analysis to identify undervalued securities. Graham introduces his famous concept of criterion of quality for stock selection. He emphasizes the importance of a company's financial stability, earnings record, and dividend history as indicators of quality. Investors are advised to focus on companies with a consistent track record of performance and stability. Another critical concept introduced in the book is the distinction between market price and intrinsic value. Graham argues that market prices often fluctuate irrationally, providing opportunities for astute investors to buy undervalued securities. By focusing on the intrinsic value of a security, which is determined through fundamental analysis, investors can make informed decisions independent of short-term market sentiment. Graham also provides insights into the psychological aspects of investing, addressing the impact of emotions on decision-making. He discusses the importance of maintaining emotional discipline and avoiding the pitfalls of greed and fear that can lead to poor investment choices. In conclusion, The Intelligent Investor by Benjamin Graham is a comprehensive guide to sound investment principles that have stood the test of time. Graham's emphasis on value investing, margin of safety, and a disciplined, rational approach to the market has made the book a timeless resource for investors. The principles outlined in the book continue to influence generations of investors and serve as a foundation for building long-term financial success in the dynamic world of investing. So, I hope you enjoyed this video and got to learn many things. Thanks for watching. Like, share, and subscribe.